Good afternoon and welcome to the Fiscal Philosophy YouTube channel. Our healthcare stocks are moving this week. Looks like UnitedHealth is, of course, back above 350 a share. This is wonderful being long the stock. I personally believe that it's on its way back probably to the 400-ish area. Might sit for a while. Some people think it's heading straight back to 500. I don't know that it's necessarily heading straight back to 500, but I do think there is still some momentum left, some juice in the tank, so to speak, on the short-term recovery, but the longer-term recovery may be longer term. In the meantime, though, what do you get at these prices? Well, a 2.5% dividend yield, reasonably healthy buyback, which hopefully we'll find out that they use this opportunity with the price being so depressed this year to accelerate on those buybacks. But it's at the moment a total shareholder yield of 3.61%. Possibly it'll come out that it's a little bit higher if they did press the buybacks at all. With the dividend growing at a solid 8% a year, this is seemingly a pretty attractive place still to park some money. Now, is the yield absolutely crazy? No, but you could get this yield on costs right now with the additional upside in the share price and the defensive nature of the stock because of the fact they have a lot of pricing power, etc. It makes for a compelling argument. Some are worried, of course, about regulation, fines, litigation, court cases, etc. All I can say is this company has the best lawyers and spends tons of money on the best political lobbyists. They donate it to political campaigns, etc. The government and political class have aligned interests with this company, and it is a major healthcare provider and, in a sense, possibly too big to fail. I don't believe that we will get a worst case scenario on any of these legal quandaries that people are talking about. Next up is, of course, Medical Properties Trust, one of my longest term holds of any stock, and one that has had a heck of a roller coaster ride. They're a REIT. They own medical properties, hospitals, urgent care clinics, etc. They have had so many things happen, from their largest tenant going bankrupt to one of their other top 3 tenants going bankrupt to having to deal with a higher interest rate environment, etc. Yet they remain pretty resilient. They insist that their underwriting is solid and that their financial position is actually quite strong. The Prospect bankruptcy has been moving along quite a lot better than the Steward ever did, as well as the fact that recently we have gotten some interesting news about progress on the Connecticut hospitals, which were meant to go to Yale New Haven. A settlement from Yale for not actually following through on the sale agreement, so they're paying some, I guess you could call them damages, and the fact that they have potentially found different buyers for those facilities at this point. The stock price has responded positively to this news. Now, I think what we really need to see is their continuing growth in funds from operations, rental revenues going up, and an eventual increase in the dividend, I think, will solidify this name and signal that it is really back on the road to recovery. Now, Clover is another story here. Clover has had a rapid 20% drop in the last few days. This has been a little bit curious because, again, this is contrasted with healthcare as far as other stocks I'm in doing quite well. It looks as though a lot of analysts, as far as what I've seen, are still relatively positive on this stock. I haven't seen any price target changes. Maybe there are some that I haven't seen, but it seems like the consensus is still that this company is better than what the price today implies. Now, I do think that in order to really prove themselves to the market, there needs to be some movement towards actual sustained gap earnings. And you can see they've been kind of holding in this break even ish area for a little while. Some break even, some maybe slight gain, some slight in the negative. And the thing is, they have a pretty good balance sheet, a pretty good cash pile. So it's not like they're going to go under anytime soon. But I think the market does want to see, like, hey, they have enough levers that they can actually produce consistent profitability that actually grows. There's a lot of supposed potential and promise with their Clover Assistant, for example. This tool should allow for some strategic advantages or the ability to sell it to others, in a software as a service type model that could give part of their business at least the metrics and valuation of a standard software business while potentially continuing to be profitable on their own Medicare Advantage plans. Let me know in the comments below if you're in any of these healthcare stocks or what healthcare stocks you're in, if not these, if any at all. Also, make sure you do the algo stuff, like the video, subscribe, help me grow this channel. My Discord, which is always free, linked in the description. And also, you can catch me every Saturday, 8 p.m. Eastern on the Cashflow Kings Live, where we'll talk about the happenings of the week. Take it easy, everyone, and have a wonderful day.